Welcome to Smart Investing with Philippe. So today was the very important FOMC meeting and the Fed Jerome Powell interview. So I invite you to stay up to the end of this video. We're going to see what happened during this FOMC, what were the key observation, the key decision, and the market reactions. And I'm going to go through the main indices and the main stocks and see what's coming next after that we had a clear view about the rate policy and what Jerome Powell has said. So let's get straight into it. Stay with me. Please subscribe. Press the like button and leave a comment, so that's going to help me to increase my audience, to increase my subscribers, so I will be able to offer more services to you, free of charge, nothing to pay, just sharing my experience. So let's get into it. On March the 19th, 2025, the Federal Reserve Open Market Committee concluded its meeting with significant implications for the economic landscape. Here are, the key highlights. First of all, interest rate monetary policy. Fed fund rates, the FOMC maintained the target range of the Fed fund rates at 4.25 to 4.50, opting for a pause amid increasing economic uncertainty. Balance sheet reduction. Starting in April, the Federal Reserve will slow the pace of its balance sheet reduction by decreasing the monthly redemption cap on Treasury security from 25 billion to 5 billion, while keeping the cap on agency debt and mortgage-backed securities at 35 billion. When it comes to economic projection, GDP growth, the Fed revised its 2025 real GDP growth projection downward to 1.7% from the previous 2.1% estimate, indicating expectation of a slowing economy. They didn't talk about the recession. Inflation, the personal consumption expenditure PCE inflation forecast for 2025 was adjusted upward to 2.7% from 2.5%. reflecting concern over rising prices, partly due to recent tariff implementation. So you see, inflation is still very well under control, 2.7%. They don't expect it to be well above 3%. Unemployment, the unemployment rate is projected to edge up to 4.4% by the end of 2025, slightly higher than earlier estimates. But the Fed also said that the economy is very strong, the employment market is very strong, and they don't expect unemployment rate to go much higher than 4.4%. Fed Jerome Powell remarks was economic uncertainty. Chair Powell emphasizes the elevated uncertainty surrounding the economic outlook, particularly due to the recent trade policies and tariff. He advocated for a patient approach in adjusting monetary policy, stating that the current stance is appropriate given the existing risk and uncertainties. About inflation dynamic, Powell noted that while inflation has risen, it is expected to be temporary, and that key word temporary is very important. However, the Fed remains vigilant and will monitor incoming data to ensure inflation expectations remain anchored. So what it says is there is a lot of uncertainty with tariff and trade policy, with all this uncertainty that is going on right now, which explain actually the market a little bit crashed. And it could have an impact on inflation, but he thinks that all this impact will be temporary. And that's a key word that the market, I think, really liked it. Market reaction. The equity market, the stock market, responded positively to the Fed's announcement. The S&P 500 rose by 1.1%. The Dow Jones Industrial Average gained 383 points, approximately 0.9%. And the Nasdaq Composite increased by 1.4%. Bond market, the yield on the 10-year Treasury note declined from 4.31% to 4.24%, indicating increased demand for government bonds. In summary, the FOMC latest meeting reflects a cautious approach to monetary policy amid high-end economy uncertainties, with adjustment to growth and inflation forecast and a decision to hold interest rates steady. Let's look at the QQQ. You can see the QQQ reacted quite well from Jerome Powell announcements. And actually, he stands on the current uncertainty and the inflation. He just said, all these will be temporary, so what are you really worried about? And it's very normal that yesterday the market corrected quite. Retraced to the lowest level of this correction before the Fed meeting, because this is always what happened. The market take a cautious stance before the Fed meeting, and after that, when the Fed reassure them, then the market can rally back again. So the market actually reacted positively today, but you can see, if you zoom out, you can see that nothing really changed. We're still at the range of trading of last week, still flattening. The bottoming process is still very much intact. although that you saw yesterday a lot of people panicking again and saying, yes, this is another downside leg and everything, but nothing at all. There is no other downside leg at all. You can see by yourself, it's still trading within the range that we saw last week. And I believe it's a bottoming process, and the bottoming process is still very much intact. And we should see the market reverse back at least to the level of 500 for the QQQ. The VIX is still around the 40, and you can see that the moving average of the RSI is still in the process of flattening and turning positive. If you take now SPY, same story, 1.09% for the day. You can see that last week the S&P 500 actually showed a clear reversal and bottoming process from last week. You can see that the bottom was for 549, and now we are at 567. More than the QQQ, you can see a clear V-shaped reversal, and we should continue after what we've heard during the FOMC and the J-Pow interview and presentation. We should go back to at least the next target is 575, and then if we go beyond that target, then we should move back to 589. If you trace back, you see the next resistance will be 575, and it's more or less the level of the 200 moving average. When it comes to IWM from last week, you can see I told you it will defend very firmly the 200 level. And from last week, actually, you see that the bottoming process is actually starting to become a recovering process. We can see clearly the bottom of last week, and you can see from the bottom of last week for 1, 2, 3, 4, 5 days. The last 4 days we have clearly broken out of that bottom. And now we are heading back at least to the level of 210 for the first, I think, resistance that I'm seeing here. And then we should head back inside the upward channel, which is the 2 yellow line. We should head back very quickly inside that channel, back to the 200 moving average, which is the level of 220. And if we do that the next coming days or week, then we will go back to the upward channel that we've seen since 2024. Okay. So when it comes to the Magnificent 7, they were all positive today. Mag 7 overall is increased by 1.67, and you can see that although that the same story as the QQQ, the flattening process and the bottoming process is still ongoing. Unlike the S&P 500, the IWM, you don't see yet a clear V recovery from the bottom. It's still bottoming. So that means there is an intense fight between buyers and sellers at that level. And I told you these are very critical level, This retracement of 0.6 for the Magnificent 7 after a downside of more than 22% is very, very important. And I don't think that hearing what J-Pow has said about the economy, the employment market, and also about the inflation, that we're going to see the Mag 7 going much lower than what we saw last week. And I'm sticking to my prediction that we are bottoming, and then we are going to see the market revert back to the upside. So the next resistance is the 200 moving average at 49. And then if we break to the moving average, then we should go back to the level of the highest volume of the last year, which is around 55. You can see all Magnificent 7, Amazon, Google, Meta, Microsoft, Netflix, Nvidia, and Tesla, they were all positive. TLT, interestingly, has increased today, which I think is responding to the probability that we're going to see today, this year, sorry. Okay, so we were talking about the rate projection for 2025 and 2026. So rate projection for 2025, interest rate cut, the FOMC anticipate 2 quarter point, 25 basis point interest cut within 2025. That's been another 50 basis point. For this year, this would adjust to the federal fund rate from its current range of 425, 450 down to approximately 375 to 400 by the end of the year. There were some divergent views among the 19 committee members. There is some variation in projection. 4 officials foresee maintaining the current rate with no cut in 2025. 4 officials anticipate a single rate cut, and 9 officials project 2 rate cut, and 2 officials expect a 3 rate cut. So you can see that the market is expecting a lot more probability of rate cut by the year 2025 than actually the FOMC committee. And at least we can see clearly that the direction of the rate for this year, 2025 and 2026, will be downward. So this is supportive of the equity market. So don't expect the equity market to crash further when you know already that the Fed is clearly showing a willingness to decrease rate. For 2026, projection, continued rate reduction, the FOMC project 2 additional quarter point rate in 2026. This would lower the Fed fund rate to approximately 325, 350 by the end of that year. Jerome Powell remarks say, caution approach. Jerome Powell emphasizes a patient and data-dependent approach to monetary policy adjustment. He noted that given the current economic condition and the uncertainty, the Federal Reserve is not going to be in a hurry to move on rates. This projection underscores the Federal Reserve commitment to monitoring economic indicators closely and adjusting monetary policy in a manner that supports sustained economic growth while keeping inflation in check. So you see, again, you can read the 2 slides. The market clearly now can expect rate to decrease at least by a full 1% by the end of 2026, which is clearly supportive of the equity market. And he's not even talking about the risk of recession and so on, but if we see a recession coming, we're going to see a much lower rate than 3.2025, or maybe we can see 3.25 much faster than by the end of 2026. So going back to the chart, you can see that the TLT is following this projection, is naturally moving up. Natural trajectory will be going back to the all-time high of 100 and the level of 100 that we've seen back in 2024. Stock specific, AMD is still recovering. You can see clearly that the bottom was reached at the Fibonacci retracement of 0.78, like I told you since the beginning. SMCI the same, still hovering, and the bottoming process is here, just holding the level of 40. Palantir 86, not moving much. Coinbase, you can see bottoming process as well. DJT also starting to bottom. Mara, same bottoming process. Bitcoin, you can see still hovering around the 200 moving average, so nothing has really changed on that. Euro dollar, like I told you that from that level of 0.9, 0.10, don't expect to go much higher than that because it went back actually to the level we've seen since the end of 2022. So that's its natural exchange rate around 0.7 and 0.11. Other than that, nothing much. The VIX is continuing its way down, you can see. And for me, this is the strongest indicator that the bottoming is there, you know, when you see the VIX collapsing so fast, okay, by 30% already from the peak. This is clearly the bottom of the downside movement. I told you already last week, and I'm still sticking to my guns because so far the bottoming has not been broken. And the fact that the VIX went down by 10% today is a clear sign that the market will go back up in the next coming days and the coming weeks. Those who miss actually the market crash and market bottom to top up and to enjoy and to DCA, you will see that after March you will regret it. March is definitely the bottom of that downside movement. So other than that, you can see some stock like Tesla already start to clearly show a bottoming process. So if you want to take some risk, you want to take some good premium on selling puts, I would sell put at the 200 level for Tesla. Though tomorrow I will probably start to sell put at 200 for Tesla. That's mean it give me a margin of 10% downside. And I believe that I can make easy money. No, sorry, see another 16% downside. So it's close to 20% downside from the level of today to the strike price of 200. And if you see, I can make quite juicy premium on that, but option matter is for another video because it's quite complex. But what I would do today is to make some money, some income on Tesla. Volatility, implied volatility for Tesla is extremely high. And looking at the downside of Tesla, I don't think it will go much, much, much lower. I mean, we are back to level we have not seen since probably back 2021, 2022. You see, we've not moved from 2021 was the last time. So it was the first time we reached that level. And you see, with 2025, we're still at that same level, you see? Yeah, and it's just like dead money for almost 4 years. Other than that, then let's look at the headline. Headline for the market is quite good. Stock get relief rally in best Fed day since July. So the market commentator said that Jerome Powell has been quite good, quite reassuring, and the Fed is holding rates steady, see slower growth and higher inflation, but not, it's temporary, you know. They don't see any recession. And Jerome Powell, of course, reassure on the economy, and beaten stock bull jump back in favor, you know. So expect a market recovery after that, after the day, because that's what the market was waiting for. A reassuring Fed, the fact that they will cut rate, the fact that inflation is transitory, and all the uncertainty on the tariff and trade policy is quite temporary as well. And they needed just that, some clarity. Sometimes just clarity is enough. On the economic indicator for today, nothing really different from what we just discussed. The Fed rate decision 4.5%. Rate cut projection first year at 3.4. And that's it, you know. Tomorrow we'll have continuous jobless claim, initial jobless claim, which is quite important data for the job market, but I don't think that there will be some disappointment in there. So I think we can conclude. I think we can conclude this call or this market update with a clear indication that the bottoming process is still intact. We can see the S&P 500 and the IWM starting already to recover. Clearly, I showed you on the chart the bottom was last week, and it already started to be much higher than last week's level bottom. For the QQQ and the MAX 7, the bottoming process is still ongoing. We don't see yet a clear recovery, but it will happen in the next few days, and in the next few weeks, those who panicked and sold will be the big losers, and those who DCA or just started to invest in those investments, especially the MAX 7, then they would have made a good opportunity to buy these at a huge discount on the PE, on everything. They haven't talked about recession. They don't see a recession coming. They don't see anything wrong happening in 2025, at least, and probably in 2026. We will see. Nobody can predict the future. But so far, I stick to my gun, and we're going to see a clear recovery in the stock market, especially the higher beta and the technology-driven stock and all the hype name. They will start to recover and go back up again. So if you have enjoyed this video, please subscribe, press the like button, and leave a comment. Help me to grow this channel, and I promise I will make every day an update video with you, just to accompany you to this journey of making money. And of course, when you reach the 100 member level, I will start to share more about my portfolio, my stock holdings, my option strategies, all my trainings. Everything will be provided to you, and you will see a clear improvement of what I can provide to you for free. You don't need to pay anything. So the only thing I'm asking you is press the thumb up like, subscribe, and leave a comment. That will help the algorithm to reach other new people and new subscribers. Have a good evening. Bye.